Hello investing friends, it's time for our June update of our $123,000 Tfsa dividend stock portfolio. In this video, we share our 20 holdings and which stocks we bought. Let's do this! For the newbies to the channel, my wife and I do our finances together. We have 3 accounts through 2 brokerages for our Tfsa, Scotia iTrade and Wealthsimple. The month of June was lovely. Our portfolio was up 0.7%. It continues to underperform the NASDAQ, S&P 500, and Dow Jones. Our TFSA is purposely designed to be less volatile than the indices, and also provide a lot of drawdown protection. With tech on a roar, our TFSA is starting to really lag. This is nothing I worry about long term. Let's get into the update, starting with VFV, Vanguard's non-hedged S&P 500 index ETF. VFV still makes up 0.2% of our portfolio. It was up 3.6% on the month, underperforming the index with the rise in the Canadian dollar. We still have an allocation target of 5%. That gives us a ton of work to do. The index is trading at a PE of 25.76, up from its low of 18.12 in September of last year. Historically, with a PE above 25, returns have been relatively low. Its top 10 holdings are now making up a huge percent of the index. Next is our stock we added back, goeasy Financial. It makes up 0.4% of our portfolio. This is the replacement stock for FIERA Capital. It finished the month up 3.5%. goeasy is in the credit services industry. It provides non-prime leasing and lending services under the Easy Home, Easy Financial, and LendCare brands to consumers in Canada only. It has been growing its dividend at a 5-year CAGR of 38% and has a very high yield of 3.5%. We anticipate this to slow quickly after this massive growth. We are trying to build this out to 5% of our portfolio. Next is another stock we added back, Canadian National Railway, CNR. It makes up 0.9% of our portfolio. It finished the month up 3.7%. Year to date, it is still down 4.8%. With all the instability and confusion on how the Bank of Canada will react to the inflation data, the railroads have been under pressure. I have a very long-term thesis on CNR. It's one of 2 players in Canada and a mainstay even in the US market. As Canada continues to grow its population and has an increased need of grain and other transport across Canada and into the US, this should have a great runway. We bought 4 shares at a cost of $153.50 a share. This added $12.64 to our annual dividend income at a yield of 2.1%. Next up is the new addition to the portfolio from May, Brookfield Corporation. It represents 1.7% of our portfolio. Brookfield Corporation is an alternative asset manager and REIT, real estate investment manager, that focuses on real estate, of course, renewable power, infrastructure, and venture capital and private equity assets. It is the Canadian version of Berkshire Hathaway, and its CEO, Bruce Flatts, is the Warren Buffett of Canada, or so we like to think. Brookfield Corp has about a third of its capital tied up in real estate, and hence, it has been hammered, down over 30% since its all-time high. Though this breaks our rule of 12, I appreciate that it is the majority holder of Brookfield Asset Management, which is the dividend growth portion. We bought 7 more shares at a cost of $41.64. This added $2.65 to our forward yearly dividend income at a yield of 0.9%. Next, we have Blossom Social, the free portfolio sharing and social investing app that I love to use daily. You can see all my trades and posts live with 1 click in the link below. Next, CANOE EIT Income Fund makes up 2.4% of our portfolio. It remained flat on the month. Its 5-year performance is still stellar at 13.7%, beating the S&P 500 by a handsome amount. This still remains on the chopping block nonetheless, as I do not intend to hold this forever as a dividend growth investor. Next up is FIERA Capital. It represents 2.8% of our portfolio. FIERA finished the month up 2% and is still down 26% on the year. We maintain this position on the chopping block with its fundamentals worsening and our investing thesis no longer holding. This could provide a nice swing trade in the event FIERA can increase its AUM and remain profitable enough to maintain its dividend. As a disclaimer, I do not swing trade FIERA. This has been a long-term hold and is now dead weight on the portfolio. Next, we have TD Bank at 3.6% of our portfolio. It finished the month up 6.3%. And yet at the halfway point of the year, it is down 6.3%, the worst performing bank. This was in the gutter for a few months, trending all over the world for the most shorted bank. It really shows you how fickle the market can be. It'll be interesting to see how much of this bounce was from share buybacks with all that extra cash they had on hand. I love TD and have a lot more buying to do. This month, we only bought 2.2 shares at an average cost of $77.97. We really should have bought 80 shares at that value. Those shares added $8.53 to our forward annual dividend income at a yield of 4.9%. Next, we have the like and subscribe button at 100% of our channel. Thank you for all the love you give, so keep smashing that button. Next up, ALGONQUIN Power and Utilities Corp makes up 4% of our portfolio. ALGONQUIN was down 5% on the month. Some big news was that Starboard took a 5% stake in the company, and they said it purchased the company's shares on the belief they were undervalued and represented an attractive investment opportunity. Interesting. I still think the next few quarters will be telling on how the stock performs and which direction the company's fundamentals go. Next, we have MANULIFE Financial Corporation at 4.5% of our portfolio. It finished the month flat after plummeting over 7% in the middle of the month. It has a low 1.2% 5-year CAGR on its stock price and has been oscillating between $24 and $28 a share for some time now. However, MANULIFE continues to print cash essentially, giving it the ability to raise its dividend at over 10% annually. I'm looking forward to the next few quarterly reports for signs of weakness so I can accumulate more shares. Next up, we have BCE Inc. at 5.2% of our portfolio. Telecoms continue the slide, and BCE Inc. is no exception. It is down 10% since its May high, and year to date, it is still flat. Telecoms are starting to yield so high, they're really breaking their historic norms. BCE Inc. generally moves quite slowly compared to the index with a low beta. We added 0.06 of a share at a price of $61.17. That added a whopping 24 cents to our annual dividend income at a yield of 6.3%. Next, we have PEMBINA Pipeline Corp. It represents 5.9% of our portfolio. It traded flat on the month. Energy stocks continue to be under pressure with lower oil prices and the assumption of the ever-coming recession. Where are you? In June, PEMBINA dipped below $40 a share for the first time since the beginning of the pandemic. We continued to add at this level. We bought 3 shares at a cost of $40.14. This added $8.01 to our annual dividend income with a yield of 6.7%. Next up, we have TELUS Corporation at 5.9% of our portfolio as well, beating out PEMBINA by less than $100. We still have lots of buying to do with our telecoms, and TELUS is no exception. TELUS remains stuck in this downward channel since April of 2022 and is looking quite oversold. One-day volume has been on the low side though. There is a lot of worry about the dividend safety of TELUS, as it is now yielding 5.6%, much higher than its 4.6% 5-year average. Its reasonable payout says it's okay. We continued the buying spree and bought 21 shares at an average cost of $25.69. This added $30.61 to our forward annual dividend income at a yield of 5.7%. Next is FORTIS, representing 5.9% of our portfolio. It is valued just a $20 bill more than our TELUS position. Utilities are also getting hammered in this high, or should I say higher than before, interest rate environment. It finished the month pretty flat. Nothing too much happening here. It'll be interesting to see what goes on in all of these non-cyclical sectors. We dripped 1 share at the beginning of the month at a cost of $56.09. This added $2.26 to our forward annual dividend income at a yield of 4%. That was with the 2% drip discount for those wondering. Our next biggest position is ENBRIDGE. It represents 6.7% of our portfolio. It finished the month up 1%, but is clocking in nearly an 8% loss on the year after Q2. Just like with PEMBINA and other energy stocks, ENBRIDGE is super high yielding right now. I sleep well at night with its dividend well covered by cash flows, and they are still increasing them every year. We continued the buying in this sector. We bought 5.08 shares at a cost of $49. That added $18.04 to our forward annual dividend income at a yield of 7.2%. Next is SmartCentres Real Estate Investment Trust at 6.9% of our portfolio. It lost another 4.4% this month as the real estate market continues to spiral downward. Year to date, this is down 9.1%. We took advantage of this decline to add 28.39 shares at a cost of $24.88. That added $52.52 to our forward annual dividend income at a yield of 7.5%. Next, we have our fifth largest holding, TC Energy Corp at 7.3% of our portfolio. It is our largest energy position. It finished the month flat, and year to date after Q2, it is flat, not including its massive dividend, of course. It was the least worst performing pipeline, with both ENBRIDGE and PEMBINA down 7.7% year to date. The fundamentals haven't changed, and oil and gas prices shouldn't have a major impact on pipelines unless volume drastically starts to drop. This is now below our book value, so we added 3 shares at a cost of $52.54 per share. This added $11.16 to our forward annual dividend income at a yield of 7.1%. Our fourth largest holding is First National Financial. It represents 7.8% of our portfolio. It finished the month flat and is up nearly 3% on the year. It is our second best performing financial stock. Shocking. I'm still sitting on the sidelines waiting to increase my position by about 20%. I have full confidence in First National to continue to deliver even in the most challenging real estate markets in Canada. Our third largest holding is Capital Power Corp. It represents 8% of our portfolio. This finished the month down 6%. After Q2, it is down 9.3% year to date. Ironically, it was our best performing utility last year and is the worst so far this year. Capital Power is an old company but relatively new to the TSX. We'll continue to grow this position as much as we can around $42. This month, we bought 6 shares at a price of $42.65. This added $13.92 to our forward yearly dividend income at a yield of 5.5%. CPX, we're keeping our eye on you. Our second largest holding at 8.8% of our portfolio remains Bank of Nova Scotia. It finished the month up 1%. Year to date, it is up 1.7%, not including its dividends, of course. Of the big 5 banks, this is number 2 behind CIBC. No doubt last year's underperformance is the reason for this. This is trading 17% above its 5-year average yield, 17.2% off its 5-year average PE, and 19% off its 5-year average price to book value, all indicating this may be undervalued still. And lastly, in top spot remains RIOCAN Real Estate Investment Trust. It represents 11.3% of our portfolio. It is down 3.7% on the month, and year to date, it is slightly better than SmartCentres, down 8.8%. Real estate continues to feel the heat and has provided attractive valuations for REITs like RIOCAN. And with the very healthy FFO payout ratio of 59%, this may give investors more confidence to accumulate shares and take the ride down and back up. We were able to drip 3 shares and buy 4 more at a price of $19.71 at the beginning of the month. This added $7.56 to our forward annual dividend income at a yield of 5.5%. So there you have it, all 20 holdings we own and what stocks we bought in June. We deployed a lot less cash than May. Our total is $3,306.63, adding $168.13 to our forward annual dividend income at a yield of 5.1%. Check out our June dividend income update to see how much our portfolio brought in. We still have a lot of work to do with about $50,000 in TFSA contribution room. Hello investing friends, it's time for our June update of our $123,000 TFSA dividend stock portfolio. In this video, we share our 20 holdings and which stocks we bought. Let's do this!